Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. Inflation begins to tick higher again. Well, after many months of cheering the disinflation that has been occurring, which, as I've explained many times in the past, is simply that prices are still rising, just not as fast as they were before. We've now seen some recent data that suggests inflationary pressures could in fact be reaccelerating. We've seen oil prices rise roughly 15% in the past 3 months, and over the past week, both headline and the so-called core inflation, which strips out energy costs like oil, have come in above expectations, both for consumers as well as producers. And not only has the 10-year Treasury interest rate risen roughly 0.5% since the beginning of the year, but the interest rate cuts that investors have been hoping for seem to be evaporating in front of our eyes. Now, for now at least, the stock market seems to be taking all of this information in stride. However, we finally have started to see some cracks in the large cap growth trade, led mostly by the biggest US technology companies, with the NASDAQ only up about 1% or so over the past month versus much stronger rates of return on the former laggards like value stocks, small cap companies, and international equities. For this week's featured insight, how to become a millionaire. According to a national study on millionaires, most of them are self-made. Just 21% of millionaires inherited a meaningful amount of money. So how did the other 79% do it? Well, some of them became professional athletes, but the vast majority knew the power of compound interest. When you have savings, you earn interest, and then you earn interest on that interest. That's compounding. The same concept applies to investments like stocks. At a modest 5% rate of return, if you could save $656 per month starting at age 25, you would have $1 million by age 65. Now, if you're willing to accept a little more fluctuation in the value of your assets by investing in the stock market, where you've historically earned 8 to 9% per year, at an 8% rate of return, you would only need to save $287 per month from age 25 to 65 to hit that $1 million mark. Cut out a few trips to Starbucks and you're well on your way to hitting that goal. Now let's say you started a little late. You can't go back to age 25. Well, a bit over $1,000 a month would get you to the $1 million mark by age 65 if you started from zero at age 40. And you can manage a compounded rate of return of that 8% level. Consistency and discipline are key. This doesn't work if you can't stick with it. Looking ahead, Fed in a box. So there's another Fed meeting coming up next week, and our monetary overlords know they're in a box. What I mean by that is they know they need to keep the markets thinking that they're going to cut rates this year without risking further escalation in inflationary pressures. As the rate of inflation was falling, it was easy for the Fed to give the markets hope regarding rate cuts. But now that inflationary pressures appear to be a little more sticky than anticipated, that's become a tougher sell. On the other hand, the Fed can't risk destabilizing the markets and the economy by telling the markets they were just kidding about rate cuts. Let's see if they can thread the needle. I wish them luck. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.